Hey everyone, welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Let's dive into today's market highlights. So, the stock market managed to push higher yesterday as Wall Street looked to recover from the Dow's biggest wipeout in over a year. The Standard & Poor's 500 rose 0.7%, while the tech-heavy Nasdaq Composite gained 1.1%. The blue-chip Dow Jones Industrial Average rose just above the flat line, eking out a victory after shedding 600 points on Thursday in its worst day in more than a year. The prior session's rout was fueled by renewed interest rate concerns, leading to the Dow's sharp decline. However, U.S. Treasury yields eased up, with the benchmark 10-year yield hovering below 4.5%. Earlier in May, sentiment was roaring, but it turned sour after stronger-than-expected U.S. business data prompted a rethink on the Federal Reserve's path on interest rates. Traders are now more evenly split on whether the central bank will slash rates at its September meeting, according to the CME FedWatch tool. This marks a significant shift from last week when only around one-third expected the Fed to hold rates steady through the fall's first meeting. Experts from Goldman Sachs on Friday said they no longer expect the Fed to make its first cut in July, instead suggesting September is more likely. But Wall Street could enter the holiday weekend in better spirits. Nvidia, whose latest blowout quarter spurred an early rally on Thursday, was up by 2% on Friday, trading around $10.50 per share. Its upcoming stock split may fuel even more retail interest in owning a piece of the company. Highlighting the macroeconomic front on Friday was a revised look at the University of Michigan's Consumer Sentiment Index for May, which fell to 69.1. The print beat expectations but still registered a month-over-month fall. This brings the sentiment reading to its lowest level in about 5 months, as inflation and interest rate concerns bit into Americans' views of the economy. That's it for today's Capital Markets Quickie. Stay tuned for more updates as we continue to navigate these market movements. Have a great weekend, and I'll see you back on Monday.